Well, let's just talk about the two main things that this probe is supposed to be looking into. One, why the market fell and why it's not underperforming. And two, the people who were responsible for this, have they been brought to book? What are you hearing from this probe so far?
Well, you know, the probe kicked off 2 days ago, and the main actors really are the Director General of the Securities and Exchange Commission, Wole, who became Director General in January 2010, and of course the CEO of the Nigerian Stock Exchange. Now, the capital market, as you mentioned, has experienced a monumental crash. We've seen the market down 68%. And what this House of Representatives committee is trying to look at is find out why it's down and why it has really struggled to recover. We've seen the market really struggle, and this year is only up about 2%. And after we seem to see some signs of recovery in 2010, the market was down last year significantly. So it's really to get a sense of why the market is struggling to recover, and of course to hold those that are accountable. One of the things that clearly characterized the market's crash were market abuses, significant speculative trading, so many first-time investors coming to the market, and there's a sense that many of them were not protected. So that's really the whole point of this probe.
One of the things that you said to me earlier on, Wole, was that the DG, when she came into office, one of the things that she did do was begin to find out what is going on with the NSE, where are there abuses, if there's insider trading, what's actually going on. And you were talking to me about almost 260 people who had been called in to be investigated, and that was almost a year ago, and yet it doesn't seem as though there's been much follow through.
Well, I think that's one of the issues that many people watching the market today are a bit disappointed about. Clearly, many welcomed the probe into the market. When Wole became Director General in 2010, there was a sense that, yes, there was going to be a huge change. As you know, she was coming from the Africa Development Bank, and there was a huge expectation that she was going to bring to bear her experience in such an institution. But then what we found is that well over a year after, over 261 individuals and companies have been sent to the Investment and Securities Tribunal, which is more or less the special court for the capital market in Nigeria. We've heard very little about prosecution. We've heard very little about people being accountable for actions taken during that time. So I think that's one of the things that people are a bit disappointed about. But interestingly, I think the dimension that the probe took yesterday was a little surprising. We got a sense of a witch hunt, at least that's what some of the local newspapers are calling it, with the House committee really putting some very interesting questions towards the Director General of the Securities and Exchange Commission, really calling into question some of the decisions that she has taken while she's been in office.
Well, now, Wole, one of the things that this does, I mean, so far you were talking to me about local investors just losing confidence in the bourse and just losing confidence in the NSE. So now when you have a probe like this and you're saying, you know, people on the ground saying to you, well, what we wanted to get out from this probe is not actually happening. What we see instead is a witch hunt. What does that do for local investors who want to see all of this ironed out so that they could be able to invest again into the NSE?
Well, I think it's still early days. As you know, it's a 2-week probe, so hopefully we'll still get quite a number of sessions and hopefully get a little more interesting about what happened and what actions have been taken to really correct the wrongs. I think that's a very important point you've raised about investor confidence in Nigeria. It's no longer news that right now foreign investors dominate our stock market. As much as 70% of daily trades are accounted for by foreign investors, so which means only 30% is contributed by institutional and retail investors in Nigeria. And in fact, what most stockbrokers will tell you is that the retail investors are totally out of the market. Of course, many of them made huge losses during the market crash, and one of the things that characterized the market crash was highly speculative trading based on leverage. It was called margin trading at the time, where many investors would borrow money from the banks and leverage up significantly their capital in the market.